Happy birthday to me. That's right, baby. Coca-Cola gave me a nice little birthday present today with an earnings report this morning. One I was definitely looking forward to. Let's dig into this. The stock's up 2.5, close to 2.5%, 2.3% at the moment. At one point was up 2.5, but reaction's not crazy positive because the whole market is up right now. But let's take a look at these earnings. Right, I expected pretty softball numbers compared to last year, obviously, because you see the restaurant segment that was not included at all last year. Because during this quarter everything was shut down, they have a 100% just boom from that, right? They have an entirely big segment that they didn't have last year, so I'd expect good comp numbers. Let's peek it. Let's peek it out, baby. And I was gonna say 40%, and my gosh, do I know my business? Coca-Cola here, non-GAAP EPS of 68 cents, beats by 12 cents, and a GAAP EPS of 61 cents is a beat by 5 cents. So a profitability beat is also a positive in this aspect too. One that certainly I think I was more uncertain of was the profitability numbers. Sometimes Coca-Cola can disappoint me on that. They really can. They've done it historically, unfortunately. But it's good to see that. Revenue coming in at $10.1 billion is up 42% year over year, and I expected a 40% number, which again, this is solely, in my opinion, I would assume 40% of this at least was simply due to the restaurant segment. Now you did see, which I think is crazy, organic revenue growth of 37% versus 29.3%. And again, this is a segment that's going to continue to be a focal point for them and other really beverage and snack companies even as well, because organic is a big push right now. People are really pushing for it. I think there's certainly an addressable market for it, right? I do believe total addressable market is not quite what people might fathom it to be, but it's obviously a big focal point right now for Wall Street. As they look towards new trendy things. For the full year, the company expected to deliver organic revenue growth of 12 to 14%, comparable EPS growth of 13 to 15% year over year versus a consensus of 12%. So overall, it's a beat in terms of the guidance there too. So we see all three aspects here are kind of a beat. This beat by $800 million, pretty nice. Yeah, it's a really good beat for Coca-Cola standards. I expected a pretty good beat, so I thought the numbers were very weak in the expectations, and I called that out before. But glad to see they beat that. So some of the finer details. Obviously, we talk about organic sales. Recovery in the markets is the main aspect here. Not a shocker there at all. Operating margin came in at 29.8 of sales, from 27.7 of a year ago, driven by favorable channel and package mix. They gained value share in the non-alcoholic, ready-to-drink beverage segment, which is good for them. You got to gain market share for sure. They pretty well bounce back and forth with a lot of this with Pepsi, and they're the two main players here, and Keurig Dr. Pepper as well, I should say. Very nice. Very nice. Coca-Cola's value share in total non-alcoholic ready-to-drink beverages, like that. Nart. It doesn't sound good. I don't like saying it, but I kind of do, though. I just feel like that's not something... Nart. I feel like you could really insult someone by calling them a nart. Yeah. But it's now ahead of the 2019 level. Obviously, good stuff. Generating strong cash flow. Cash flow from operations came in at $5.5 billion at the end of the quarter. That's fantastic. Really good to see a great cash flow number, and that's what this company's really good at for sure. Sometimes disappointing, like last year was a little disappointing, but I understand more. But it's good to see that because obviously this funds their dividend and continues, further expansion of new products. So it's really essential to see this. Definitely something I'd like to see. Let's take a look at the press release. we're zooming in. Global unit case volume grew 18%. Not as, again, that number is not going to be as high as you would have expected, mostly because the restaurant segment is a big portion of this. I'm hoping they separate that into an aspect so we understand, but we'll see. We will certainly see. Net revenue is up 42, organic revenue is up 37, operating income grew 52%. And again, these will be softball numbers too. Really easy to crush out of the park. David Ortiz playing on the women's softball field. That's what you got here, okay? He's gonna crank them out more than likely. So operating income 52. Yeah, I mean that's not crazy at all. EPS grew 48%. You should expect this because obviously the business was quite devastated last year, down around 40% in revenue compared to where they were, simply due to the destruction of the restaurant segment. I've seen net revenues up 42% to $10.1 billion. 26% growth in concentrate sales and 11% growth in price to mix, driven by ongoing recovery. It doesn't really mention, which is crazy. It doesn't mention how big the restaurant segment is for him here, but that is the main portion of it. Kind of shocked they don't mention that, but yeah, I don't know. That seems a little wild to me. I don't know. Some other key aspects which I really probably would want to mention here would be this innovation through loved and scaled brands. Announced the launch of a new and improved Coca-Cola Zero Sugar recipe, obviously mostly to combat what Dr. Pepper just did with their Zero Sugar platform. Seems a little weird. I mean, I don't know. It's crazy that there's both diet, there's zero sugar, there's low. I mean, it's crazy how many different variations people create of this stuff. Closer to the great taste of original Coca-Cola. I like me a Coca-Cola. I can't lie to you. I really do. Yeah, I do. Curious what the can looks like. I think the Dr. Pepper Zero Sugar can, they did a pretty good job of making an eye-popping can, so we'll see what that looks like. We'll see what that looks like. But that's really, Coke Zero Sugar, kind of the big portion of it that they're focused on. 15% year-to-date, which is good. Yeah. I mean, it's good to see that. Zero sugar, again, it's another trend that they're trying to take advantage of. So, revenues and volume. You see every segment saw growth. Good chunk of concentrate sales you see over in EMEA, which is pretty impressive. It's really good to see from an organic standpoint. Again, EMEA, really good to see that. Numbers looking good. Unit case volume, pretty consistent. Pretty consistent there as well. So it's good to see it. Operating income, good growth everywhere as well. We like seeing that. We really do. I certainly would like to take a look here at, they go into segments here. Not that it's super crazy in any of those numbers, but I would like to take a look at none other than the balance sheet. Don't hide it from me. I love a balance sheet. I love it. I really do. Here it is. Balance sheet for you. I'm a sucker for a nice balance sheet. So, total cash and cash equivalents and short-term investments, interesting stuff to say. But we just like to look at the current assets number, okay? Cash, you don't need a separate total line for that. Sorry, guys. You don't. Total current assets here coming at $22.4 billion compared to $19.2 billion of 6 months ago, 6 months comparison. So, decent numbers there. Growth in the cash position was the main change there. Total assets here at $90.2 compared to $87.3 billion. So, not too bad. Growth of around 3 billow. That's what I say now. Personally, I call it billow instead of billion. It's what I've been saying forever. I think it'll catch on one of these days. 90 billow. So great gain of 3 billow. Pretty good. From a liability standpoint, 15.3 billow compared to 14.6 billion it's a little bit of a growth there for sure. More, you see $1 billion growth here in accounts payable and accrued expenses. Nothing significant there. By any means. If you look at a total stockholder equity number, though, you see that it did increase, which is nice. So long term didn't quite increase at all. Capital surplus. You see none of this really grew that much. So stockholder equity saw a rise. 24.2 billion compared to 21.2 billion. Hey, that's a growth around 3 billion right there, which we saw here in the total asset line. So pretty good. Liabilities stayed the same, while assets grew a little bit. So I'd like to see that. I do. Company's headed in the right direction. Still a stock I think is trading. I don't think it's trading that ridiculously high. For historical standpoints, I do believe in terms of valuation it's a little bit higher, but I think that valuation obviously makes a lot more sense as we get into this year and that PE ratio levels out a lot more. It was heavily affected last year due to everything going on, and so was the revenue, but now I believe it'll level out a lot more, and I think over time this stock will pretty well trade stagnant the rest of the year. I can't lie to you. I'm not gonna be someone feeding you some horse crap. It's up 21% in the last year, which is pretty high for historical standpoints for Coca-Cola, right? They're just up 25 in the past 5 years total. So in recent past, this is a high performance in the last year. I don't see a point in which this doesn't just trade stagnant for a little while as that valuation starts to level out and make more sense. For now, it's a great core holding still with a good dividend, and that's why I have it in the portfolio. So it's not necessarily expected to get an incredible amount of capital gains. I think my cost basis is 45 on this, but that's a position I like a lot. Company that's very reliable, and the dividend's incredibly reliable. So if that's what you're looking for in your portfolio and you need something, and I think it's a good rock. I think everyone should have a good consistent rock in your portfolio, because if you go with too much volatility, you might be hurting one day when the market takes a downturn, which eventually it always does. But that's what I got for you today. Hope you enjoyed and you have a good one.